If an accountant fills in your tax return and they lie on it, who does HMRC come after? Is it you? Is it them? Well, Dennis Lucas was certain it wasn't his fault, but HMRC thought different. So in this video, you'll learn exactly what happened to Dennis Lucas, what triggers a HMRC investigation, including how they're using AI to catch you, the mistakes that turn an ordinary person into the one holding a tax bill for HMRC, and what you should do if you find yourself in this situation. The UPS driver, Dennis Lucas, had a normal job. He was taxed through pay-as-you-earn and never filed a tax return in his whole life. Now, some of his colleagues had used a company called Apostle Accounting to claim their tax back. This was money for cleaning their work uniforms and meals whilst they were on the road. They each got around 3 grand, and once he heard about it, he thought, well, I want a bit of that, and so he got in touch with them. The only bit of information that Dennis gave to Apostle Accounting was his P60. And this is a summary of how much he'd earned during the tax year. They never asked him once for any receipts, any bank statements, or any details on how much he'd actually spent. Now, this should have been a huge red flag, but they just sent him a number, told him that was how much he was going to get back, and then asked him to approve the return. So he approved it, the money came through, Apostle took their 24% fee, and then sent Dennis the rest. And he thought that was it. And I'm sure you can probably guess that that wasn't how it ended. And the reason it wasn't is the most important tax lesson that most people never get told. Everyone probably imagines the HMRC office as boring people sat around in suits drinking cups of tea all day, which it probably is. They also have this image in their head of alarm bells ringing and flashing lights going off as soon as anyone does something suspect on their tax return. But realistically, it is way quieter than this. In this case, HMRC simply looked at his tax return and saw a claim that didn't add up. He was claiming travel and meals as an employee, and generally an ordinary employee can't claim for meals or travel, so a return showing thousands of pounds of those expenses clearly stands out. Now, I can guarantee most people watching this video aren't UPS drivers, but these are the things that actually put you on HMRC's radar, in rough order of how often I see them. A number that doesn't match the pattern, expenses too high for your job, income that suddenly drops, a figure that's wildly different from anyone else doing the same work as you. A mismatch between sources. HMRC already gets your data from your employer, your bank, your pension provider, and now from online platforms like eBay, Etsy, and Vinted. If your return says one thing and then their data says another, those alarm bells and sirens might be going off. Round numbers and repeated numbers. Claiming exactly £250 of expenses every year looks invented because it probably usually is. And as bad as it sounds, the company that is doing your return. Dennis wasn't singled out. HMRC worked out that Apostle Accounting had filed hundreds of similar dodgy claims and pulled all of them, which brings us to how they see all this in the first place. HMRC has a supercomputer AI system called Connect. You might not have heard much about it, and that's pretty much the whole point, because Connect pulls data from a huge range of places and cross-checks it against what you've already declared. Your employer's payroll, your bank interest, land registry, if you own property, the DVLA, card payment processors, and the big recent one, online platforms. In 2025, HMRC received reports on roughly 4 million online sellers. The year before, it was 1.5 million. So that's more than doubled in a single year. The earnings linked to those sellers came to nearly £55 billion. And HMRC has said it's in the final stages of building a system to automatically analyze all of it. So if we just think about that for a second, 4 million people selling data being fed into a matching engine that's almost switched on. This is why the old assumption of, well, it's just a bit of cash and they'll never notice is completely finished. It's not a human deciding to look at you anymore. We all know how powerful AI is getting, and this database is going to find mismatches almost instantly. Dennis got caught because his return didn't make sense. The next wave gets caught because the data doesn't match the return, with no suit-wearing, tea-drinking human needed to start the process. Here's the 5 mistakes that turn this situation into you being the one with the tax bill from HMRC. Because we can all probably agree that Dennis wasn't a terrible guy. The court accepted he genuinely believed the claim was legit, but he still lost, because in tax, honest mistakes cost real money. These are the ones I see ruin people who never meant to do anything wrong. The first mistake is thinking that because someone else files your tax return, that it's their problem. But this couldn't be further from the truth, which I'll get onto in a little bit. Mistake number 2 is approving a number you don't understand. Dennis approved the figure without having any idea about where it came from. He just trusted that Apostle were doing their job correctly. Before a tax agent submits your return, they have to tick a box to say that the return has been sent and approved by their client. So when your tax agent or accountant sends you the return, make sure to have a look at it to see what's actually going on. And I know you might look at the return and think, well, I've got no idea what I'm looking at, but just have a look at some of the figures and check if they're reasonable. If you're a small business and see a figure of £20,000 in your travel expenses, alarm bells should be ringing in your own head. Mistake 3 is assuming that a tax rebate means free money. As much as it might seem like one, a repayment from HMRC isn't a prize. It can be money that you're rightfully owed, but it's based on what's in the return. If your claim is wrong, they can simply reverse it for years afterwards. Mistake 4 is believing that personal sales don't count. If you're selling your own old clothes at a loss, then this isn't taxable. But the line between clearing out the loft and running the business is pretty clear. If you're not honest about this, then don't be surprised if you end up with a brown letter in the post from HMRC. Mistake 5 is paying a percentage fee firm that's too good to be true. Anyone who contacts you promising you a rebate for a cut of the money and doesn't ask to see a single receipt should be a huge red flag. A legitimate tax agent asks for evidence because the claim has to be true. I've had clients ask me in our first conversation if they're going to get a refund, but I can't answer this. So what actually happened to Dennis? Well, when HMRC came calling, his argument was the natural one. I didn't do this, the company did. They told me I was entitled to it, and you need to go and speak to them. But unfortunately, the truth is, Dennis had authorized them to act on his behalf and claim the money. So it wasn't their fault, it was his. So because HMRC found Apostle Accounting to be doing this on purpose, they got to reach back even further than normal. The usual window is 4 years. Careless behavior stretches it to 6, but deliberate behavior opens it up to 20 years. And the law says it doesn't matter whether you were being deliberate, if the person acting for you was, the long window applies to you. So Dennis was on the hook for 20 years of claims he didn't understand, filed by a company that he trusted. The main thing to take from this is that you are responsible for what's on your tax return, even if you didn't fill it in, even if you were misled, and even if you never even saw it. And that's not HMRC being harsh, that's just the law. And the tribunal noted he wasn't alone. More than 800 people were caught all the same way, all repaying the full tax even though the company had taken a quarter of it for themselves. Here's what you should do if you find yourself in this situation. Don't panic and don't ignore it and hope that it just goes away. A brown letter from HMRC isn't court summons, but ignoring that letter is the most expensive thing you can do, because every option below gets worse the longer you wait. Next, you need to find out what's actually been filed in your name. You can see your filed returns and your tax account through your HMRC online account. If an agent filed for you, you're entitled to know exactly what they claimed. Read it and try to understand every line. If you think it's wrong, come forward before they come to you. This is the whole nature of the game. HMRC's penalties are driven by behavior and who moves first. Telling them voluntarily sits in a far lower penalty band than waiting for the letter. Genuinely careless mistakes can carry no penalty at all. Dennis never even got to that choice because by the time he understood what the problem was, HMRC had already written to him. Next, keep your own records. The reason Dennis couldn't claim for meals was because there was nothing real behind them. Receipts, bank statements, or simple logs are what turns HMRC's estimate into your actual lower provable figure. Lastly, get a real legit tax agent. Not one that's guaranteeing you a rebate, and not a company that rings you up saying that they can get you thousands of pounds back from HMRC. Someone you choose who asks you for the paperwork and who will deal with HMRC on your behalf properly. That's not a sales line, it's a specific thing that was missing from this entire story. Dennis did almost everything a normal, trusting person would do, but he still ended up being on the wrong side of HMRC and being £3,000 out of pocket. Now this video might have scared you off getting a tax agent altogether. And if that is the case, then I've put together a full walkthrough guide on how to complete your own self-assessment tax return. So watch that video next. But if you want to pay as little tax or get as much money back from HMRC as you can legally whilst following all of the rules, then follow the link in the box below.